Okay, we'll just quickly move on to a couple of general tips in relation to factoring, especially given where we are in the current economic cycle. Basically, if you're not comfortable in chasing your own debts, what can actually happen is that there are various factoring companies that can actually chase your debtors on your behalf. Okay? They can also credit insure those debtors. So the idea is that if those companies, the companies you're dealing with, actually went bust, they will have a credit insurance facility in place that basically says, okay, this customer is worth $20,000, they've gone bust, here's your money. Final thing, factoring companies can and indeed do support appropriate turnaround situations. They won't support them all. If they believe that a company has suffered, maybe over the recession, and they've taken a little bit longer to make those hard decisions, but they're starting to take those hard decisions and looking towards turning around, factoring companies can and indeed do support turnaround situations. They don't support all of them, but they certainly can do. Certainly something that the banks, with the greatest respect to them again, will not do. So, we've looked at leveraging the power of factoring. Those are just 5 of the key tips that sort of looked at. Second thing I want to look at is just giving you the opportunity to secure a facility. So if you're looking in the marketplace, there are a couple of little tips I want to give you. First thing is, you'll see here, these are the various facilities that exist within the factoring marketplace. And you'll see how the risk factor, from the factoring company's perspective, when you're looking at a higher risk situation, for example, a new start company, or a company that may be in a turnaround situation is considered a high risk. And then you've got the low risk where maybe a company's been trading successfully, is trading profitably, good cash flow, etc., etc. And generally, as you move across that spectrum, you've got the different types of facilities that are available. In general terms, the premium products are confidential invoice discounting and asset-based lending. In the current market, if you are not profitable, don't even consider those facilities. Okay? You have to be profitable for those premium products. There are very rare exceptions to that, where you might have to offer property security, but confidential invoice discounting in the current market is incredibly hard to get if you're not profitable. So the first thing I would say is just be pragmatic about what you're looking at. But in general terms, the factoring companies at the moment will look at SMEs with turnover of 500k and upwards. New starts can be considered, although they are considerably more risky and they are viewed cautiously. In general terms, they'll look at lengths from 100,000 to 100 million. And I guess the key thing I want you to remember from just this presentation is this next one. They deal in the business-to-business space with a product that is buy, sell, forget. So for example, if you're selling, for example, tumblers like this, they're a very simple product. Nothing much can go wrong with them. Give me an opportunity to have a drink. The occasional one might come back broken. But if you're looking at things like the construction sector, where you've got liquidated damages and long-term contracts and the dispute around every corner, that's not buy, sell, forget. The preferred industries, factoring companies love temporary recruitment. If you're anything to do with temporary recruitment, you can get the best facilities in the marketplace. They adore that, because that's all based around signed timesheets, and they adore it with good quality customers. Import and distribution and wholesale are favoured because the product is generally buy, sell, forget. Manufacturing and printers, in general terms, it's buy, sell, forget. And transport. There are a couple of quirks with transport, but generally speaking, most factoring companies like transport. So the areas that they don't feel that particularly comfortable with, we'll come on to in a second, and the other industries can be considered, but they do have certain challenges, and there are certain factoring companies that are more commercial than others that can look at, for example, the construction sector, or can look at difficult industries.